Hey there, crypto comrades. If you thought you could just hodl your way through life, think again. The wild world of crypto is more than just bull runs and moonshots. It's courtroom drama, political plays, and high fashion. So put on your favorite Bitcoin beanie and grab a caffeinated drink because it's time for your weekly Crypto Catchup. Talk about a reality check, folks. Remember Ooki DAO, that decentralized autonomous organization that was sure it could play fast and loose with commodity trading? Well, they just found out that they can't. The US Commodities Futures Trading Commission, or the CFTC, just showed them who's boss. US District Judge William H. Orrick decided to drop the crypto hammer on Ooki DAO. The outcome? A hefty fine of $643,542, a total trading and registration ban, and an order to close down their website. That's right, you heard it here first, but it doesn't stop there. In a monumental verdict, the court declared Ooki DAO a person under the Commodities Exchange Act, making it responsible for any legal blunders. I mean, come on, just because you're decentralized doesn't mean you're exempt from the law, right? The CFTC wasn't happy and accused Ooki DAO of operating an unlawful trading platform, acting as an unsanctioned futures commission merchant. And guess what? The court agreed. The director of the CFTC's Division of Enforcement, Ian McGinley, threw a stern warning to anyone thinking of hiding behind a DAO structure to avoid legal accountability. Ooki DAO's predecessor, B0X, and its founders also face similar accusations. A reminder, kids, playing outside the legal sandbox will get you more than just sand in your shoes. You know what they say, if DAO can't do the time, don't do the crypto crime. Or was it more like, down to mess with the CFTC? Alright, crypto enthusiasts, hold on to your blockchain hats because the SEC could be heading for a shakeup. On June 12th, House Majority Whip Tom Emmer and Rep. Warren Davidson pulled out the legislative big guns and introduced the SEC's Stabilization Act. Their aim? To overhaul the SEC and say ta-ta to Gary Gensler, its current chair. They're pretty peeved about what they see as a litany of abuses under the Gensler's watch. It's like a soap opera, but with fewer love triangles and more regulation discussions. So maybe a soap opera for finance nerds? This proposed legislation has some serious game changers. One is adding a sixth commissioner to the SEC squad and creating an executive director to supervise the day-to-day grind. The act is also gunning for a balance of power, limiting a single political party to no more than 3 commissioner seats at a time. Oh, and it's promoting teamwork, mandating that commissioners play nice and collaborate before greenlighting significant actions. So, what's the goal here? It's to safeguard US capital markets from the roller coaster ride of political agendas. The proposed structure mirrors that of Federal Election Commission. Whether this is a step in the right direction or just a plot twist in our finance soap opera, only time will tell. Well, it seems like the SEC is going from Securities and Exchange to soap operas and excitement. Tune in next week to see if Gensler gets voted off the island. Have you ever looked at your Louis Vuitton bag and thought, this is great, but what if it was digital? Well, even if you haven't, Louis Vuitton has. The French fashion titan is prepared to launch a collection of physically linked, non-fungible tokens, or NFTs, called Via Treasure Trunks. Yep, you heard it right. Fashion has officially met the blockchain. This collection for the digital age will include a few hundred digital trunks up for grabs to the stylish savvy consumers in the US, Canada, France, the UK, Germany, Japan, and Australia. Registration started on June 8th, and you can start splashing your crypto cash on June 16th. Each NFT is set at a pretty 39,000 euros, including tax, to US customers, so start saving those satoshis. But it's not just about the digital bling. Holders of these NFTs will score a physical replica of their digital treasure trunk and enjoy VIP access to upcoming Louis Vuitton products and immersive events. I mean, who wouldn't want to be part of the LV VIP club, am I right? Now, these NFTs are soul-bound tokens, which mean once you buy them, you're bound together for life, or at least until you decide to sell the individual items you mint in the future. This is all part of Louis Vuitton's VIA project, underlying the brand's endeavor to marry high fashion with high tech. I mean, I've heard about wearing your wealth, but this is next level. If anyone asks how much I'm worth, I can just say, just check out my blockchain. Well, it seems like the Singapore-based Crypto.com is cutting back on its guest list. Starting June 21st, the crypto exchange will stop serving institutional clients in the United States. The reason? They say it's due to limited demand from big league investors given the current market terrain. Or maybe it's just that institutions have commitment issues. But don't worry, you little retail investors out there, you're still on the A list. You can continue to use Crypto.com's platform, including their CFTC regulated up-down options. It's like the crypto equivalent of saying we're not breaking up, we're just seeing other people. This news comes during a bit of a tumultuous time in the crypto sphere, with other major exchanges, Binance and Coinbase, finding themselves on the wrong end of lawsuits from the US Securities and Exchange Commission. Talk about crypto drama. So, Crypto.com is breaking up with institutional clients. I guess you can say it's not them, it's just the market landscape. Here's some breaking news for you crypto folks. Binance US, the American arm of the major cryptocurrency exchange, is putting the brakes on deposits in good old Uncle Sam greenbacks. And it's not stopping there, as it has also warned customers of an imminent stop to USD withdrawal routes. Binance US announced a suspension on June 9th, a move which is its reply to what it called the extremely aggressive and intimidating tactics of the United States Securities and Exchange Commission. Binance US is adopting these measures to safeguard its customers and platform from SEC's wrath. But don't worry, they're not going full hermit. Their company has revealed plans to evolve into a crypto-only exchange, while promising to maintain a 1-to-1 ratio for customer assets, so your digital dosh is still safe and sound. Cryptocurrency trading, staking, deposits, and withdrawals will continue as per usual. This all comes after the SEC flexes regulatory muscles and issued an emergency order on June 6th to freeze Binance US's assets. Despite the SEC freeze tag, Binance US has assured customers that their assets are still snug as a bug and that the platform is functioning normally. Binance US is turning its back on the dollar, so I guess you could say it's making sense of the issue. Or rather, making satoshis? Well, there you have it, folks. From DAOs to Louis Vuitton and institutional drama to fiat withdrawals, it's been quite a week in the cryptoverse. Remember to subscribe and engage with the video if you enjoyed it, and don't forget to tune in next week for another episode of Crypto Catchup.